Hello everybody. So today I'm using somewhat of a provocative title to discuss the Mara ATM. There's a lot of emotions online about the Mara ATM and how bad it is and how the CEO is pocket lining and just getting the money and how the stock is going to have, again, it could, but it would be short term. I believe in this company for the long run. I think Bitcoin miners are heavily undervalued right now. We're only paying a little bit more than net asset value for Mara. And dilution, even though the ATM is here, and it wouldn't be that wise to do dilution at only a 15% premium. Once the ATM is in place, Mara can do dilution at a higher premium. So I just want to get things straight, talk about dilution and why dilution does not work the same with Bitcoin proxies. Hence my title, I love dilution for this type of stock. So let's go ahead and let's start with the beginning. Mara is announcing a new ATM, and the ATM is for $2 billion, and it may take them a year, it may take them 2 years, it may take them longer than that to issue the new stock. And of course, Mara right now has the price to NAV that is the lowest out of all of the Bitcoin stocks that I follow. It's literally the lowest. And so it's kind of a catch-22 because you could ATM here and it's still going to be accretive, but then you have the opportunity cost of not ATMing at like a 1.5 or 1.79. You know, a stock that doesn't do that, for example, is CleanSpark. But when I look at CleanSpark, I'm like, CleanSpark should really do an ATM and buy Bitcoin. They haven't done that just yet, which is unfortunate because I don't think it's understanding how Bitcoin works. And I'll get to that and I'll mention Michael Saylor on MicroStrategy, but let's go. So first of all, we are not going to necessarily ATM right now. That's point number one. Point number two, if they ATM'd on $2 billion right now, it would still be accretive, right? Why? It's not very good. Price to NAV is not very good. I'm the first one to say, but it would still be accretive. What happens if you ATM with a price to NAV of 1.15? That's still earning a 15% yield on the dollar, right? So you would still be earning about 300 million in Bitcoin yield by expanding the entire ATM at 1.15. Now that's a long-term thing. They would probably sell, in my view, at a much higher price, but you would be selling 2 billion singles for the price of $1.15, earning 15%. And so that's how dilution works. And theoretically, dilution to buy Bitcoin theoretically works up down to the 1.1, or in their case, actually a 1.03, because they got 3% fees on this ATM. But theoretically, it works down to 1. And theoretically, it's neutral, because if you ATM to buy Bitcoin at 1, it should be neutral. It should not make a difference. But the market sentiment just hates it, and they don't think deeply about this. In my humble opinion, this is no financial advice. This is just my views, just entertainment here. I see so much negativity on X. Like I said, it's hard to read. Dilution does not work the same for Bitcoin. Like I said, if you dilute and convert 100% of the money issued into Bitcoin, you collect the price to NAV premium. That would be the 15% for Saylor. That would be 79% if he ATM'd right now. But it's more than just that. It's because of taxation, because of the way this works. If you are going to buy Bitcoin with your earnings, with the money that you make, you're going to pay taxes. If you buy Bitcoin via balance sheet alteration, so you buy Bitcoin via dilution or via debt, then the money that gets into the business does not hit your P&L. It doesn't hit the income statement. The money goes through the cash flow statement, and the cash flow statement does not get taxed. You do not get taxed on dilution or on borrowed money. Otherwise, every time somebody borrows $500,000 to buy a house, they would get a 39% tax bill on that. That is not how it works. Alteration of your balance sheet, whether be it a company or an individual, alteration of your balance sheet does not hit the income statement. It does not hit your taxes. It hits your cash flow statement. And that's the big trick in this book, is that you're much better off just buying the Bitcoin than earning the Bitcoin while mining it. And this is why Michael Saylor's MicroStrategy is trading at a higher price than any of the miners who actually mine it. And when they mine it, they have to actually put it in the income statement, and boom, you get taxed. I'll get into a second into how depreciation makes it so they're barely taxed anyways, but still. And by the way, using the money printer is not taxed in the fiat era. And if you understand Bitcoin, you understand that deeply. You understand, if you understand Bitcoin, that, for example, most households around the world become wealthy not as a result of their savings habit. No, they become wealthy because at some point, say a 2-person household was able to have 2 full-time jobs, and at some point they were able to qualify for a big mortgage, and they were able to become rich in their 60s, 70s because they qualified for a big mortgage 30, 35 years ago. And the fiat system really rewards the people who are unresponsible, who bought too much house, versus the people who bought a very reasonable house that they could afford in cash, right? That's kind of a system works. So diluting actually gets you that access to the money printer. Operating the business in order to mine Bitcoin and save the Bitcoin is good, but not as good as dilution. Why? Because it hits the income statement and you're going to be taxed. And so this is the main distinction. And conventional thinkers do not look at it that way. They don't understand it. That's why dilution gets a bad rap. It gets a bad rap because they think of dilution being used for empire building, right? The best example of that, for example, debt and dilution together, right, was AT&T's acquisition of Time Warner, which is still one of the biggest flops in the history of acquisitions. There's a long history of people diluting to acquire, and the market hates that, but they don't look deeper. They don't think that this could be different for Bitcoin, right? Other silly things is, sometimes you could do buybacks on a struggling business. Well, you wouldn't deal it to do buybacks, but you could spend the money to buy back your stock or borrow money to buy back your stock on a struggling business. Famously, Eddie Lampert did that on Sears back in 2004. You could just double down on a struggling business line, double down on a bad idea, right? And so if you dilute to get cash, to then double down on a bad idea, and this bad business idea is itself a business derivative, well, that's not very good. And of course, the most hated technique, strategy, is when you dilute in order to compensate the CEO. The market definitely hates that, but there's a special case where when you compensate the CEO where it's actually accretive if cash does not get out of the business. If you issue shares, cash does not get out of the business, and that makes your business more anti-fragile because businesses need cash. But dilution for a Bitcoin business works different because dilution in the world of Bitcoin is intended to acquire more Bitcoin. So when you dilute to buy Bitcoin outright, when you dilute to pay your electric bill to mine Bitcoin, which will then be kept, or to buy equipment, which will then be used to mine Bitcoin, or even if you dilute to compensate your team members or your CEO so that the business keeps cash to buy more Bitcoin, in that case, it does not fall into the bad rap empire building dilution reputation. It falls into the hodling world, the hodling Bitcoin strategy, which is the MicroStrategy, right? Michael Saylor strategy, but the strategy also that Bitcoin miners who hodl have adopted. They've adopted that. So when you dilute to accumulate Bitcoin, it works. When you dilute to accumulate fiat or to accumulate a fiat derivative like a bad acquisition, it's based on astute management. It's based on how good the manager is, but it's much more random. It's much more risky, and you're not accumulating more Bitcoin. And so I wanted to bring in Michael Saylor's latest interview to clarify the point on taxation here and why dilution is accretive. And in the context of a Bitcoin miner, you are in trouble because you're mining money. You're mining digital energy, right? But you're mining money. You're mining an idea. You're mining a product. You're not selling it. You're not converting it into fiat. Yet in the way they're taxed right now, Bitcoin miners are taxed when they mine, i.e. when they create this digital energy, this idea of Bitcoin, this digital commodity, this intangible thing, just like an app or a song are intangible, a Bitcoin is intangible. They're taxed at the point that they mine it, and they're also taxed at the point when they sell it. And so even though over the long run this doesn't make a difference, because if you pay when you mine, then let's say you mine it at 80,000, you're gonna pay taxes on 80,000, and then you're gonna pay taxes between 80,000 and whatever you sell it at. So over the long term, it doesn't make a difference if you sell the Bitcoin, of course, but over the short run, it forces you to pay taxes on an asset that you haven't sold, a product that you haven't sold. And that's why Saylor advocates for the miners not to be taxed when they actually mine, but to be taxed when they actually make a profit, i.e. when they actually turn that Bitcoin into fiat. But they're taxed when they create the Bitcoin, right? And the Bitcoin is so intangible that it's much closer to creation, it's much closer to a song, it's much closer to an app, and it's not profit, right? It's not fiat. You're not getting in any fiat when you mine the Bitcoin. And so when you mine Bitcoin to hodl it, you have a tax liability. You have to pay your taxes, but you don't have the fiat to pay the taxes. And so Bitcoin miners, instead of selling the Bitcoin to get the fiat to then pay the taxes, they choose dilution, and they choose dilution to among other things, hodl the Bitcoin, being able to hodl the Bitcoin. And so the electricity, for example, to mine the Bitcoin can be paid via the dilution. So the way Bitcoin miners are treated from a taxation standpoint is very akin to, say, a singer being taxed right now when they write a song, and not when they sell, and when they sell the song later on, and they're taxed on that delta, or an app developer being taxed when they create an app and when they sell the app. And of course, what's going to happen if Bitcoin goes to zero, right? Are these Bitcoin miners going to have a huge tax credit? Is that something that's going to happen? Probably not, right? So it makes very, very little sense. The current tax code desensitizes Bitcoin mining and makes Bitcoin mining more profitable outside of the US than in the US because of the way it is taxed. And that's why dilute to buy strategies are more powerful, more accretive than just mining strategies. And going back to the thumbnail of the title, why I love dilution in the context of hodling and in the context of hiring Bitcoin. The dilution, when you dilute, the money goes through the cash flow statement. It doesn't go through the income statement, and as a result of that, it does not get taxed. It's a balance sheet alteration. It is not income. That's the power of a MicroStrategy strategy over, say, the Mara strategy. Now, mining is still a good business because of other reasons. First of all, because of the operating cost and the depreciation of the miners. Really, the profits are very minor when you get taxed on those profits. It's very small because they incur a huge depreciation on the miners and on the equipment. And even though it's true that depreciation of the miners is most likely fair, those miners become near worthless after, say, 5 to 7 years. So depreciation on the miners is fair. You still have some depreciation on, say, the infrastructure acquisitions, on, say, the buildings. That depreciation is more beneficial because the infrastructure may outlast the length of that depreciation. Depreciation is kind of a pro-business, I don't want to call it a loophole, but a pro-business disposition in the tax code, right? So the tax code is advantageous sometimes, disadvantageous other times. But anyways, the point is because of that, I think ATMing for a business that's trying to hodl Bitcoin is a smart move, and it's a way to really tap on the incoming market liquidity. It's a way to tap on the money that's sitting on the sidelines. It's a way for Mara to look at money moves and money movements around the stock, and if there's a lot of interest in the stock, boom, you can hit the ATM and you can make those accretive dilutions. And so my guess is that ATM is not going to be tapped heavily until the price to NAV becomes more favorable. And in my view, they would be wise to probably tap on the ATM when the price to NAV returns to 1.5 or above. And given how Fred Thiel is close to Michael Saylor, I have no doubt that they will be doing the right thing. I am confident in this CEO. I know many people are upset that the stock is down, but it's a short-term thing. Over the long run, the miners are still highly profitable. I remember buying CleanSpark at $2. I remember those days, right? And people typically tend to not zoom out. Like I think it's important to zoom out. And the last caveat I'll make about this is that you gotta be careful when you ATM for non-hodling purposes. When you ATM to quote unquote mine fiat. When you ATM to mine fiat, for example, this is what Iran is doing, and I really don't like that Iran is selling the Bitcoin. When you ATM and you sell your Bitcoin, all of a sudden, the usual suspects that your typical conventional investors come back alive, which is the dilution is really diluting shareholders to go into a business endeavor. It's really a zero-sum game. It's a game that's mostly based on the CEO's execution level and whether the CEO is astute or not, while really diluting to hodl is a positive sum game for the shareholder, in my opinion, regardless of the skill of the CEO. So the usual doubt when you ATM to quote-unquote mine fiat, to quote-unquote invest in business endeavors that will bring you fiat money, taxable money via the income statement, in that situation, of course, the usual suspicion applies. But that's not the case for Mara. Mara is a Bitcoin hodler. It is the second largest hodler of Bitcoin, owning 45,000 Bitcoin or something like that right now. So anyways, this was not financial advice, not investment advice. I hope you see where I'm coming from and my entertainment only thoughts on this. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you so much for watching and have a wonderful, wonderful day.